everyone, and welcome back to the channel where we demystify the complex world of short squeezes and hard-to-borrow stocks. Today, we're diving deep into a fascinating name that recently popped up on our screener, RYOJ Company Limited, ticker symbol RYOJ. This isn't just a generic example. We're going to break down the actual numbers, the real costs, and the specific dynamics at play for RYOJ right now. So, if you've ever wondered what it means for a stock to be hard to borrow or what makes a short squeeze possible, you're in the right place. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's talk about RYOJ Company Limited. This is a Japan-based company operating in the industrial sector, specifically within consulting services and health services. They provide labor and corporate consulting, alongside health services, to a diverse customer base. With a modest market capitalization of approximately $44.05 million, RYOJ isn't a massive blue chip, which often makes these smaller names more susceptible to unique market dynamics. Looking at its recent price action, RYOJ has seen some volatility. Today alone, it's down 8.33%. Over the last 5 days, it's dipped 11.29%. However, zooming out to the last 30 days, RYOJ is actually up 24.19%, suggesting some significant swings in sentiment. What is cost to borrow and why it matters? Before we get further into RYOJ specifics, let's quickly explain cost to borrow, or CTB. When a short seller wants to bet against a stock, they first need to borrow shares from a broker. This isn't free. The cost to borrow is an annualized fee, expressed as a percentage that short sellers pay to hold those borrowed shares. Think of it like interest on a loan. A high CTB indicates that there's strong demand to short the stock and or a limited supply of shares available to borrow. When a stock is hard to borrow, it simply means there aren't many shares readily available for shorting, driving up the borrowing fee significantly. These fees can easily exceed 100% annually, meaning short sellers could pay more than the stock's value just to hold their position for a year. This high cost is a critical pressure point in a potential short squeeze scenario. Why this stock is hard to borrow right now. Now, let's apply this to RYOJ Company Limited. What makes RYOJ interesting for our discussion? Our screener flagged RYOJ with an astonishing annualized cost to borrow fee of 567.1%. That's not a typo. To put that in perspective, borrowing RYOJ shares for a year would cost a short seller nearly 6 times the value of the shares themselves. To a chart of CTB, this extreme CTB is a flashing red light for potential short squeeze conditions. Furthermore, the CTB momentum has dropped by 42 percentage points over the last 5 trading days, meaning it's been consistently high, but the rate of increase has slowed, which can sometimes indicate a plateau before a shift. Critically, there are only about 3,000 shares currently available to borrow for RYOJ, against an estimated float of 2.3 million shares. This tiny supply relative to the float is a major contributing factor to the sky-high CTB. Our internal composite squeeze score, which factors in CTB level, momentum, bar supply, float size, and price action, currently pegs RYOJ at 42.4 out of 100. Squeeze mechanics explained. So, how does a shrinking supply of borrowable shares and a high CTB lead to a short squeeze? It's simple mechanics. Short sellers borrow shares and sell them, hoping to buy them back later at a lower price. But when the borrower supply dwindles, and the cost to hold those positions skyrockets, short sellers face increasing pressure. If the stock price starts to rise, perhaps due to positive news, strong buying volume, or even just general market sentiment, the short sellers are faced with a double whammy. Their unrealized losses grow, and their daily cost to hold the position remains astronomical. To exit their positions, short sellers must buy back the shares they sold. This buying activity, especially when forced or frantic, adds upward pressure to the stock price, creating a feedback loop. More buying drives prices higher, forcing more shorts to cover, which in turn drives prices even higher. That's the squeeze. Dilution risk check. An important factor to consider for any potential short squeeze is dilution risk. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. This influx of new shares can essentially flood the market, absorbing buying pressure and negating any upward movement from short covering, even if the cost to borrow is extremely high. For RYOJ, our checks found no recent diluted SEC filings like -1s, -3s, or 424 BS in the last 90 days. This means, at least for now, there isn't an immediate, obvious overhang of new shares that could be released into the market and undermine a short squeeze thesis. We also found no recent reverse split for RYOJ in our look-back window. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Despite the incredibly high cost to borrow for RYOJ, it's crucial to understand that a high CTB does not guarantee a squeeze. It can also signify that short sellers have very strong conviction in their thesis, and they are willing to pay a premium to maintain their short position. This is where volume comes into play. For RYOJ, today's volume was a mere 3,750 shares. Compare that to its 30-day average volume of 444,651 shares. This means RYOJ currently has 0x its average relative volume. Highlight volume numbers. A short squeeze typically requires significant buying volume to push prices higher and trigger those forced buybacks. Without that buying interest, even a stock with a 567.1% CTB might just languish or continue its downtrend. We've seen RYOJ fall 8.33% today and 11.29% over the past 5 days, despite the very high CTB. Watch for sustained increases in buying volume that break above its recent averages as a potential catalyst. So, RYOJ Bobber Company Limited. RYOJ presents a fascinating case study with its astronomical 567.1% cost to borrow and incredibly limited borrowable shares. This setup highlights the immense pressure on existing short positions. However, the current lack of significant volume suggests that while the conditions are ripe for a squeeze mechanically, the spark of buying interest isn't there right now. Keep an eye on RYOJ, watch that volume, and remember that even the most extreme CTB needs buying power to translate into a short squeeze. If you found this breakdown helpful, please hit that like button, subscribe to the channel for more deep dives into hard to borrow stocks, and let us know in the comments below what other stocks you'd like us to analyze. Thanks for watching, and happy trading.